Welcome to Sapience Learning, your gateway to book summaries.
A Random Walk Down Wall Street by Burton G. Malkiel. Investing. For many, it feels like a game played behind closed doors, charts, tickers, and people in suits shouting numbers that seem to make no sense. But what if success in the market isn't about timing trades or picking the next big stock? What if it's about patience and trust? Burton Malkiel, a Princeton economist and lifelong student of the markets, has a message for us all. You don't have to be a Wall Street insider to build real wealth. You just have to stop chasing shortcuts and start walking, one steady step at a time. Favorite quote from the author. It is not hard to make money in the market. What is hard to avoid is the alluring temptation to throw your money away on short, get-rich-quick, speculative binges. It is an obvious lesson, but one frequently ignored. So let's walk together through the core lessons from A Random Walk Down Wall Street and uncover how ordinary people can win the long game. Lesson 1. Risk isn't your enemy. It's your teacher. Every investment carries risk, and that's not a flaw in the system, it's the system itself. Malkiel reminds us that higher returns always walk hand in hand with higher uncertainty. But instead of running from it, the wise investor learns to dance with it. Imagine two friends investing during the pandemic. One buys airline stocks, hoping for a rebound. The other invests in home office companies and tech firms thriving in lockdown. When the market swings, one loses, one gains. But a diversified portfolio, one that holds both, survives. This is the heart of the modern portfolio theory. It teaches us to hold assets that move differently, stocks, bonds, even cash, so when one stumbles, another rises. Diversity isn't just a buzzword. It's the shield that protects your financial future. Still, Malkiel warns against blind faith. Don't buy because someone on TV said it's the next big thing. Do your homework. Read reports. Understand the business. Because in the long run, it's not luck that builds wealth. It's informed patience. Lesson 2. You can't beat the market, but you can join it. Every day, millions of investors try to outsmart the market, timing trades, chasing trends, reading charts like fortune tellers. Some win for a while, but most eventually lose. Because here's the truth Malkiel lays bare. The market already knows more than any of us do. That's why he champions index investing, a simple, powerful way to own a slice of everything. Take the S&P 500, for instance, 500 of America's largest companies bundled into one fund. When you invest in that index, you're not betting on one winner. You're betting on progress itself. And over time, despite recessions, crashes, and panics, the market grows. Because the world grows, technology advances, companies innovate, people create. The market in the long run is a reflection of human resilience. Malkiel's point is simple. Stop trying to beat the market. Instead, favor the market, and it will favor you back. Invest consistently. Reinvest your dividends. Ignore the noise. The quiet investor, he says, will always outlast the loud one. Lesson 3. Your emotions are the biggest threat to your portfolio. The stock market is a mirror, and what it reflects most clearly is human nature. We chase what's rising. We panic when it falls. We follow the crowd, and in doing so, we often destroy our own returns. Malkiel identifies 4 psychological traps that pull investors off course: overconfidence, bias, herd mentality, and loss aversion. Overconfidence whispers, you can predict what's next. Bias convinces us that our hunches are somehow special. Herd mentality makes us buy what everyone else is buying, just as the bubble's about to burst. And loss aversion keeps us clinging to losing stocks, hoping they'll bounce back because we can't bear to admit defeat. We've all felt it, that sting of watching a stock tumble after we bought it, or the regret of selling too soon. But the best investors aren't those who avoid emotion. They're the ones who manage it. They treat investing like breathing, calm, steady, unshaken by every gust of market wind. Malkiel's advice? Create a plan and stick to it. Automate your contributions. Don't check your portfolio every day. Let compounding work quietly, like time itself. He tells us that real wealth isn't made in moments of excitement, it's made in years of discipline. And if you can master your impulses, the market will do the rest. So, what's the real lesson of a random walk down Wall Street? That the path to financial freedom isn't a sprint through chaos. It's a slow, deliberate walk through time. A walk that rewards patience over prediction, reason over emotion, and simplicity over speculation. Who should read this book? The 30-year-old saving for retirement. The 25-year-old learning to invest their first paycheck. The dreamer who wants to make money work for them, not against them. Because this book isn't just about finance, it's about philosophy. About letting go of control, trusting the process, and allowing time to be your greatest ally. So take a breath. Invest slowly. And remember, wealth isn't built on brilliance, but on behavior. In the words of Malkiel himself, it's not hard to make money in the market. What's hard is resisting the temptation to lose it. That was a random walk down Wall Street, a timeless reminder that sometimes the smartest move is simply keep walking.
We hope this book summary brought you joy and moments of reflection. Happy learning from Team Sapiens.